Right, ladies and gentlemen, welcome back. 2023 in the building. First chart talk of the year. Ben, how you doing? How's the New Year's? Looking good. Looking like the fresh, gel with the comb there.
Fresh out the shower. Went to the gym floor. No, I'm doing good, man. I'm packing up the house, moving out.
Oh yeah, what's
So,
happening? You want to tell your viewers tonight? Yeah, you're a multi-business man. What are you doing over there? Give us some tips.
I'll keep it a very short story. For those who probably know, I had this little funny legal battle with my town over renting my house out in the summertime. They gave me a bunch of fines and basically told me to stop what I was doing, which I did. I put a pool in, I did a lot of things without permits that I was unaware of that weren't allowed. Gave me a bunch of fines. It all got settled very recently, and I've been kind of
Got to
battling
chime
it.
in for 1 second. And for the viewers at home, the one thing Bennett loves to do in life, he loves to learn the hardest way possible. I'll let you continue.
That is absolutely true. So learned this the hard way that Airbnb is not allowed in my town. I know that now. Quick little Google search probably would have saved me all the trials and tribulations of what I had to go through. But
Tens of thousands of dollars too.
yeah, it was definitely not a cheap lesson learned, but learned it. And at the end, again, on very good terms with the building department and my town, but they're like, "You're not going to rent your house out." And I was like, "No, like I built this house. It was kind of like a fun little pet project, and it just unraveled into this big debacle."
Yep.
And it was like this Facebook group, this like Facebook moms group of this town was what like blew this up. They saw my Airbnb listing. It's like a group of moms that kind of just complain. And
Nothing better to do.
yeah, it's just kind of like rich moms complaining about, people in the town. So I was the topic of conversation back in the summertime, and then they started calling the town and the mayor, and that's how it got shut down so quickly. But the funny circle of events of this is that a friend of mine's mom is in this group, and a week ago she saw a posting from a realtor looking for a luxury rental in this town to relocate a white collar a resident in my town for a few months. So he sends me the text, like the screenshot of this group, and then basically promoting a long-term rental, which is allowed. And I immediately, like, I initially didn't pick up on it. I just thought it was funny that this same group that was shitting on me was doing the same thing. And I realized he wanted me to call the realtor. So I call the realtor, and I'm like, "Hey, I have a home in Wyckoff that kind of fits in what you're looking for. I wonder what the next steps are." And she's like, asked my name. I'm like, "Oh, it's Ben." She's like, "You live on," and she names my street. I'm like, "Yeah, that's me." She's like, I know who you are." And I'm like, "Oh shit, like this is like a sting, like I'm like the tax set me
Ding.
up." And she's like, "No, no." She's like, "You know my mom, so mom's a realtor." So it all worked out. So she got me this like crazy monthly rate for the next 6 months, and I have to kind of get out of here Friday, but it's all good. So I'm moving out for 6 months. I'm gonna come visit
6 months, making a pretty petty on that one, or what?
I mean, yeah, it's definitely pretty crazy number for what they offer me. And the insurance company's paying it, so it's not the people that are moving in here are paying it. So I don't, I'm glad that the insurance company's paying a stupid amount. But I'm
Major win.
gonna come hang out with you for a week or two. We go to Italy for a couple weeks. So for the 6 months, at least a month of it, I'll be traveling, and then it'll just be, relocating for the other few months, which is not a big deal.
Yeah.
But
No issue when you getting that fat bag.
yeah. But
Without further ado,
the funny part, the last second of it was when I had to go back to the building department. I've been there almost every day, not every day, but I've been there a lot since August. And I go back in there this week, and I'm like, "Oh, I need a long-term renter's permit." And the lady's face just dropped. She's like, "Are you kidding me? Like, we've been dealing with you for 4 months now. Every other day you're here filling stuff out, and you said you're not going to rent, and now you're back here immediately once everything is settled to do exactly that." And I was like, "Well, I can let I'm doing it the
you
right
got
way
it,
this time." Was that?
and you got the permit.
And yeah, it's like it's per their rules. So
They're
yeah.
probably just like, get out, just go and get out, just get out.
Get out of this town for a few months. So, but yeah,
That's hilarious.
let's get on the market outlook.
All right, let's get on market outlook. Let me share my little screen here. All right, can you see my screen?
Yeah.
All right. So, got some interesting news out of the Fed today. We had Fed minutes, and the last we heard from the Fed was December 13th and 14th when they last raised rates 50 basis points. And now the big thing was their terminal rate. So Jerome Powell has maintained that the terminal rate, meaning when they'll stop hiking rates, was going to be around that 5% threshold. Then mid-December, we learned that it may have to go higher than that 5% threshold because their inflation outlook for the year 2023 was increased from 2.8% to 3.1%. So he is very aggressively trying to get inflation tamed, and he's making it known that that is the major goal of the Federal Reserve. They came out today and they said they're not planning on even cutting rates in 2023 because they're just so worried about inflation. Now, they've done the song and dance where he's switched up the tone as the data has improved. So that's something to hope for. But everyone who's hoping for that Fed pivot, which would be the Fed quickly going from hiking rates to quickly cutting rates, so get some investment going in this market. The Fed came out today and said, don't hold your breath on that. They're still waiting on the data. We'll still find out, their next meeting, they're going to raise rates in February 4th, 5th, or 6th. I forget what the date is. And we got a big jobs number this Friday because the number one killer of this market, the number one thing that is maintaining inflation is people spending, which all goes back to wage growth in jobs. So he wants to see unemployment tick up. He wants to see wage growth tick down. And we found out today, the officials are pretty much on the same page, meaning, it's all about inflation. It's not about, what happens with the market. It's not about where the S&P is. It's all about the CPI and inflation levels. And, getting, if we have to have a recession, let's bring it here and try to get it over with as quickly as possible and do as little damage as possible in the meantime. So he wants to see the unemployment rate tick higher and, again, wage growth tick lower. What's up?
It's just like it's like kind of messed up, and it's like in that perfect world, but they want people to lose their jobs and wages to come down so they can lower. It's like numbers on a screen for them where it's like just like messed up with we want to see higher unemployment. It's like it's kind of messed up.
Well, you started to see it. You had Salesforce come out today and said they're cutting 10% of their workforce. Another one of those companies with Domino's. We'll see a lot of these layouts in the tech industry that have just been so ballooned over the last 10 years. It's like, look what Elon did at Twitter, and what percentage of the company did he cut? Some huge number, right?
Mm-hmm.
I check out Twitter every day. The company's working fine. The app. So companies are going to see that. Noticing the numbers. Inflation is going to kill all economic growth. It's just if you grow your company 7% and the inflation 7%, you didn't grow your company.
Stand still.
Have you gone food? I went to Trader Joe's and spent $300 at Trader Joe's this week. Price of eggs, it's like $8 for a dozen eggs out here. But so all right, let's get into the broad market and what's to come from here. So all right, so we got the S&P up here. We have the SPY, and we've been in this tight range. Try to get it again. So we can see, we've been in this downtrend since the beginning of last year. Literally, the first day of last year was the highs of the market. Now we're walking into this market this year. I believe we closed down 18% on the S&P, and now we're in this tight range. And this was the last CPI number. It got leaked early, and we gapped up. We've done nothing but sell off, and now is this a mini base or is this a bear flag? Mm-hmm. Now, there's two ways to look at this, which is gonna kind of give both sides some justice. Where if you look at this move right here, and then this this little flag here in the context of this downtrend, massive market downtrend, it would make sense that we're moving lower. However, we've seen advancers, stocks that move higher, outpace decliners in this market for the last couple of weeks. So there's been a lot of relative strength under the hood. It's like, yes, big tech is still getting hurt pretty bad. Like Microsoft got crushed today. I think they had a hiring freeze or some sort of job numbers. But we saw a massive bounce back today where it's like Apple was getting destroyed yesterday. Tesla's finally coming back. So I think if I had to guess what happens, I think we bounce from here to 400 and then another sell off. I don't think they'll make it easy, but pretty much my plan is whichever way this range breaks, I'm going to trade in that direction the rest of the week. I'm going to keep everything short term. That's what's been working for me the past 3 months. We break this higher, I'll look to get long and offload, into this 410 resistance area. And if it breaks it down, I'll look to get short, and trade the momentum that way. So, kind of a great setup for traders, with what the market's done the past 2 weeks, if you count Christmas and today and yesterday. So, I like this setup. It's a lot of chatting out of me though. So let me break this and kick this over to my friend.
World market outlook. Again, Shake touched on the SPY in the short term. I'm going to touch on SPY long term. Again, for the year, I still think we see new highs. I think for this year, again, we had this whole year was obviously a big breakdown stage. And then we started to shift.
Go to the monthly chart. All right, sorry.
Well, no, I know the monthly, that's really shitty too, but I'm just looking at the daily. So we got this big breakdown stage here. And then we transition into this base. And again, a lot of these stages overlap. So we have breakdown, we have the base. And again, a year of trading is a very long time. And I think that we slowly start to, I still think we can still see new lows, but I still do think that we see new highs. And one of the reasons I think that for the most part is a lot of these CEOs now are starting to talk about recession and stocks hitting lower. And when the whole crowd kind of leans the same way, it's often, the opposite.
Well, there's never been a recession history where everyone's fucking called for it. This is like, it's madness. It's like,
well, that's where it's like everyone's expecting, everyone's just looking down, figuratively speaking, and when everyone's looking down, expecting the market to go lower, typically the opposite is going to happen. So
right, and there's so much room for upside surprises and shit like that.
Yeah, and even like the RV that I think you posted it in Discord, or maybe it was Link who posted it today with like the performance where was it?
Oh yeah, we both posted it. Where I was talking about
real quick, June with this $100,000 day is
right
insane.
It's like 5 months rent an Airbnb. Yeah,
yeah, crazy. Where was this number? Okay, so I'm very much. Oh, I guess it was Link. I mean, you posted this stat, and I guess he found this about it. So this stat is, kind of going along with, again, showing, the drawdowns in the market, major drawdowns, when the bottom is the 1 year performance after 3 and 5 year, and the averages. And this, again, everyone's looking down. Everyone's very negative, very pessimistic about the market. Do we see new lows? Probably. But I do see this base. We've seen a lot of, even in the pre-market Monday call earlier this week, there were so many good setups out there where it wasn't a lot of just names breaking down, hey, new lows. You kind of touched on it before. So I still think by end of year, I think we see SPY 500, but that doesn't mean that we can't still see, a new low in the SPY within that time frame. So short term, like you said, bear flag, a little base, just trade the direction. I think on the two sectors that I think have the best upside this year are the two worst sectors of the year, which are telecom, which has gotten just smoked, has entirely retraced the pandemic move, but it has been trying to base out here for the last half year or so. And eventually when it breaks this downtrend, it won't be as much of the hated sector and start to climb back higher. And I think the same with consumer discretionaries. Amazon really, getting crushed with this sector, pulling it down. But these are the sectors where you have from here back to highs, 100% plus move. Same with telecom, where a sector like energy that chart-wise looks great through those highs through 130, that 100% move from here is just not as realistic, because that would send this thing to 260, and that's just not a level that energy has ever seen. So even though the energy sector is relatively stronger than telecom and consumer discretionaries, the percentage move that it realistically will have over the next year probably is not as great as telecom or consumer discretionaries just trading back into the range it was trading at just a year ago. So that's my kind of much more broader outlook on the market and these two sectors being the.
I mean, I like that outlook. I mean, it's not like, damage hasn't been like ridiculously done. So there's been, you type of any chart, Amazon was down, what, 60% for the year or some shit, it's like, it could probably still go lower, obviously. We have some pain ahead. The Fed is telling us, we got some pain ahead.
Yeah.
But it's time to start buying these things for long term, slowly and very small, and just keep firing out. We get new lows. I'm gonna load the boat on the SPY. I can't wait.
This Tesla chart is insane. This is like, I think the
Yeah,
you're
I'm
talking
up.
about you're talking about like the SPY monthly, just because of how I think you mentioned it before. It's like how
Well, here's the funny part is that um, Tesla still, Tesla is dropped. What is it dropped from 400 down to one third? It's dropped 70% or so.
Mhm.
Uh, it's still worth four times as much as Facebook, Meta, who owns
Mhm.
Instagram, WhatsApp, and all these other things. So I mean, it could come to $60 easily, like no
Mhm.
problem.
It's just crazy when they
It's
like
like, yeah, it's
when they split the stock, it just makes the numbers. I even seen that the other day, like, did we ever trade Mobileye back in the day?
oh my god, it's one of my best names. I love
Yeah,
Mobileye.
but they just someone mentioned it.
They spun it out. They spun it
Okay,
out.
they did okay because I was
This
like
thing
they
was sick back
yeah
in the
because
day. I love this
someone
thing.
brought up money. I'm like Mobileye. I'm like we used to trade that
Nobly.
all the
Yeah.
time, and then I'm like there's no way it just can't. So I guess that's true,
Yeah,
but
it's like an Iranian company, isn't it?
I'm not even sure. I remember just Mobileye the name. And I'm like we used to just feature the name
Yeah,
all
it's
the time.
self-driving.
But again, the Tesla charge is insane. I think it's just when they split the stock so much, like when you split adjust this, how high this thing really went as a car company is just insane. What that price would be. So what?
Yeah, yeah,
Really?
yeah. There's
But anyways,
he
let's get
he
into
alienated his entire core customer market, becoming this, Republican Twitter owner. Now he's fighting the woke crowd. Woke crowd was buying all the Teslas. Now it's deliveries aren't hitting what their targets were, and
but
this week this
wasn't
type of
the
company, it's a cyclical company.
yeah
Still the car company. They want to say it's a tech company or whatever. It's still a car company.
yeah. I've never been the biggest Tesla fan, but again, this also is the craziest stock
Yeah, I mean it's been a great
of our
stock.
like our generation, I guess, where which is insane. Anyways, you want to go to some top ideas?
Sure.
Let me
You
stop
want to go
sharing.
first? I go first. I'll go first.
Yeah, let me share.
Here's a few. I should share my screen, huh?
Yeah.
Screen two. All right. There we go. All right. So we got a little TJX. Retail has actually been very strong.
Mhm.
And just a nice little flag here at highs. I initially bought this around $80 today. And I got out to close just because the market closed awfully. And then, we're playing defense right now. But if this one wants to take higher, you could buy this one to 80, 60 today's highs, no problem. That one still looks good. What else I got on the list? Your boy Monster. Monster got a nice little flag. Nice flag. And then if we zoom out, we can see that this flag is trying to turn long-term resistance into new support. So easy entry in that one through that 103 area, through the highs of these right here. And then I like this Vertex long too. I got a couple shorts I'll talk about in a sec. This Vertex, biotechs. We both are kind of in agreement here. We think biotech's going to be the next sector to lead. They've been very strong. Vertex, bunch of damage has been done, and now it's just consolidating. It looks like sellers are running out of gas right at the 200-day simple moving average. We see the 8-day kind of hugging it as resistance. If it can break that area to the upside, this 290. I like this one for a pop into. Can't really see what the area is, into this like 310 area. Definitely. I'm starting to really like this one. I like how it's just refusing to go lower.
Mhm.
Um, and it just looks like sellers are exhausted. So I can see this one ready to pop. And it's a great entry from a risk reward standpoint. A couple shorts I'm looking at. So this PI, coming into today, without this big reversal candle, probably would have liked this for a long. But now with today's downside reversal, I'm looking this one through a short through yesterday's lows. And again, these are more so scalps, this 107 area. I love this stock for long term, but again, gave me a lot of info. I took this long today. I scalped it really nicely. This SMCI, Super Micro Computers, great earnings, but a high flying growth name, and we know what happens to these names when the air comes out of them. So this one tried to break out today. We took it long, scalped it nicely, made money, and now I'll actually be looking to take this one short tomorrow through this 82 area. Maybe if we end up breaking that consolidation of the market to the downside. Like this is the kind of thing I'm looking for. So keeping it pretty simple with those names. That's really it as far as I'm looking at, or for the rest of the week. Take things one day at a time with this market.
Mhm. It's funny. It's always funny, like for out of all the charts that are out there, when we both have basically the same ones on the newsletters. We obviously don't read either of ours before we send them out. So like you had TJX, I had TJX. I think you had Oxy, I had Oxy. I think those are the two that I can think of off the top. But the only other ones really, oh, and Monster as well. One of the member ideas was this Elf. Let me share the screen really quick. Was this Elf?
I'll share. You got it?
Yeah, I got it. So Elf has another one. This is actually something on Monday, had the longest time and got rid of it way too early. But again, it's Elf right now. Blue Sky Breakout, not really recent IPO, but been IPO for a couple of years. But the 57 looked phenomenal. You mentioned Monster.
Yeah, you're an old man thinking this is a recent IPO.
No, I know. No, it was like I've been in since it was like I want. Oh my god, it kills me. I was taking it through this IPO high setup, and I was in it for years. And of course, years later, I get out.
And you didn't have any for the move.
No, I did not. And that's like, well, I think again, this was from 2017 to 1, 2, 3, 4, 5 years. That this is like a perfect example of the difficulty or the reality of long-term investing. And I think a lot of the members have learned that this year who started using like M1 and went very tech focused into 2022. And then we saw how difficult that was. For Elf, I was in this name for probably 4 years, buying it at 20, buying it in the 10s. I think an average price in like 18. And when it finally got back up into here in these 30s, I was just in this name for so long. And I'm like, just get me out of this thing. Like, it's not the craziest return, but it's something. And of course, it pulls back in. I think it's the best idea. I'm going to move these little red circles. Kind of got out. I got stopped at like down to the 30s over here. And it's just a very long time. Pulls in, drops 50% from 30 to 20. I think it's a great idea to get out of it. And of course, you forget about it. And a year later, it finally goes. So that's one of those lessons where someone mentioned it the other day, and I was like, Elf at 55. Like, what are you talking about?
Yeah, like God damn.
And I was like, oh my god, I had so much Elf. And it's a makeup company. If you do not know, Elf is a very low tier makeup company.
It's a discount makeup company. Yeah. So recession, you'll still buy makeup. They buy the Elf now instead of the Ulta.
Exactly. So it's like this is like you're buying makeup from CVS. It's not not Ulta brand, but this was
not that Fenty,
Yeah. So again, this was a lesson for me that really hit home of just when you don't have a conviction name and how long-term names can take to develop. Sometimes having a simpler long-term approach, buying the big picture, buying the broad index, can often be an easier approach. And that's a big lesson of what the members learned this year, where if I can pull up the big picture model, see if it's going to load. And again,
there you go.
Yeah. So again, the S&P this year was down 21%. That was the close at the end of the year. At the lowest, it was down to, I think it was 31 was the low. This model, the big picture model, is our long-term model that basically mirrors the S&P. The only difference is that instead of buying the S&P in its entirety, we buy the sectors individually so we can better rebalance, versus just buying the entire. I always compare it as like a whole pie of pizza, buying the SPY, and then when you buy the big picture, buying your slice of pizza, but cut up into these 12 slices. And you can just better allocate the money throughout the year. So this is set and forget. This is not you actually clicking any buttons. Market was down 21. The model was down 13. So the model outperformed the market when the idea is for it to match the market. So a lot of members saw the benefits of this year compared to individual stock selection for the long term. And even for myself included, I'm starting to shift more of my longer term stuff into just the broader index via this model, and then keeping more of the short-term swings so I don't get stuck in these Elves and these Amazons when they're down 70% for the year, when I can be more conservative with long-term stuff in a model like this. So that was a big lesson I think a lot of members learned this year from a lot of recaps that I've been doing. But with top ideas, again, you touched on a lot of them, Monster, this TMCI in the, healthcare biotech space, there's 25 has been setting up. And you touched on TJ Maxx as well. So that's really it on my end.
All right, cool. Well, I think that wraps things up for this first chart talk of the year. So give us a like, give us a subscribe. What you got?
So I have a question more for the members. Me and Shake have been trying to go back and forth on how to make this video better. And we're debating of should we do more current events of what's going on in the market? Should we still focus on what we're doing with just the major market and major stocks? So if there's any feedback, criticism, or ways that we can improve this, again, we do it for you guys. So any way that we can make it better, we're all ears. If you want to hear funnier stories of us getting in trouble or not getting in trouble, we always have those. Hopefully less of those this year, but so, I'm sorry, Shake, what were you saying?
Maybe like, subscribe, and ask questions about what you like. Yeah, I don't know. We do this for them. So, all right. Well, let's wrap this thing up.
All right, guys. First one of the year.
All right. Catch you next week.